Hey everyone, welcome back to Corporate Decoder, where we decode the company's financial secrets. And today, Armour Residential REIT is revealing a little something about their bread and butter. Let's dive right into this report. Armour Residential REIT is telling us about a cash dividend. Now, this isn't a quarterly report or a big financial overhaul. It's more of a heads up about what they're paying out to their common stock shareholders. Think of it as a company saying, here's some cash directly to our owners. This report is dated August 27, 2025, and it's all about an event that happened or was announced on that very same day. The company we're looking at is Armour Residential REIT, Inc. They are a real estate investment trust, or REIT. What that basically means is they own, operate, or finance income-producing real estate, so they're in the business of rentals, mortgages, and all that good stuff. You can find their common stock trading on the New York Stock Exchange under the ticker symbol ARR. They also have preferred stock Series C, which trades under ARPRC. This shows they have different ways they raise money and offer ownership in the company. Digging into the details, the main point here is that on August 27, 2025, Armour announced a cash dividend. This is basically a payout of money from the company's profits to its shareholders. Specifically, they are paying out $0.24 each share of their common stock. Now, to understand if this is a big deal, we need a bit of context. If you owned 100 shares, that's $24 in your pocket. If you own 1,000 shares, that's $240 in your pocket. If you own 100 shares, that's $240. It might not sound like life-changing money for a small investor, but for the company, these payouts add up quickly. The report also tells us the key dates for this dividend. The holder of record date is September 15, 2025. This means if you own the stock on that date, you're eligible to receive the dividend. And the actual payment date is September 29, 2025. So you have to hold on to your shares until mid-September to get paid at the end of the month. It's a clear timeline. The filing also mentions that there's a press release attached as Exhibit 99.1. Think of this as the official announcement that gives more color and detail about the dividend, and we're incorporating that information directly into this report with this reference. This exhibit, the press release, is the primary piece of information they're filing with the SEC to notify the public about this upcoming dividend payment. And finally, like most filings these days, they include cover page interactive data, which helps computers and analysts process the information more easily. It's like a digital tag for the document. Signing off on this report is Gordon M. Harper, who holds the title of Chief Financial Officer. This means the company's top financial executive is confirming the accuracy of this information. Now let's put on our investor hats. What does this dividend announcement really tell us? Armour Residential REIT is essentially sharing its success, or at least a portion of it, with its shareholders. Declaring a dividend is often seen as a sign of a company's financial health and confidence in its future earnings. It means they're generating enough cash to distribute to owners. However, remember that this is a real estate investment trust. REITs have a unique structure. They are required to distribute at least 90% of their taxable income to shareholders annually in the form of dividends. So for Armour, paying out a dividend isn't just a nice gesture, it's a fundamental part of their business model. The size of the dividend, like this $0.24 per share, is a reflection of their performance in generating income from their real estate assets. While the filing doesn't give us the total dividend payout or the company's overall financial performance right here, the fact that they are paying a dividend of $0.24 per share means they are likely comfortable with their current income stream. Investors in REITs often look for stable and growing dividends as a primary source of return. What we don't see in this specific filing detail is how this dividend compares to previous payouts or the company's overall profitability. To really get a handle on Armour's financial strength and the sustainability of this dividend, we'd need to look at their more comprehensive financial statements, like their quarterly 10Q or annual 10K reports. These would show their revenue, expenses, profits, and cash flow, which would give us the full picture of whether this $0.24 dividend is a sign of booming profits or just meeting their minimum legal obligations. For Armour, a key risk would always be changes in interest rates. As a REIT that often finances its properties or mortgages, rising interest rates can increase their borrowing costs and reduce profitability, potentially impacting their ability to pay dividends. Also, the performance of the rental market or the broader economy directly affects their income. In conclusion, this filing is a straightforward announcement of a shareholder dividend. It confirms Armour Residential REIT is distributing cash to its common stockholders. While this is positive news for shareholders, it's a very small piece of the puzzle. To make a real investment decision, you'd want to see the bigger financial picture. Are their revenues growing? Are their expenses under control? And how does their dividend measure up against their overall financial health and industry peers? What are your thoughts on this dividend announcement? Do you hold Armour stock? Let us know in the comments below what you think this dividend signals for the company's future. If you found this decoding helpful, please give this video a thumbs up and subscribe for more regular insights into what public companies are really saying. And don't forget to join our Discord community for more in-depth discussions. Thanks for watching, and we'll see you in the next Decode.